What is going on, people? It's Matt from Liquid Loans, and in this one we're going to look at some of the problems with traditional finance and how it shapes up next to DeFi. So with no further ado, let's go. So, traditional finance, or TradFi for short, refers to the old ways of accessing financial products and services using a brick and mortar bank, for example. TradFi has inherent features that are both advantageous and disadvantageous when compared to DeFi. So in this one, let's pull them both apart and get into their respective pros and cons. First, TradFi is what we all grew up with and saw our parents and older generations use, so it's much more familiar to the masses and therefore there is less of a learning curve. Secondly, most traditional financial products operate on the reserve currency of the world, the US dollar, which has the most adoption and liquidity worldwide. Third, TradFi also offers insurance like the FDIC, who examines financial institutions for safety and soundness and can refund you up to $250,000 US if you were to lose your money. And fourth, TradFi institutions also offer advantages which cannot be had by interacting with code on a blockchain. For example, most banks still offer the ability to have a face-to-face interaction with a service rep or at least customer service support of some kind. First, traditional banking has high operating costs such as property tax, utilities, rent, repairs, payrolls, etc. Second, TradFi banks have limited hours of operation and are often closed due to holidays and external circumstances. Third, the operational speed of banks can often be excruciatingly slow. For example, sending transactions or getting approved for loans can take anywhere from days to weeks, simply because of their internal processes are very inefficient. Fourth, due to the high operating costs and profit-seeking nature of banks, they often have high fees and commissions to use their services. In other words, they are middlemen. Fifth, banks often have limits to the size of transfers, as well as limits on transferability to accounts in other countries. Sixth, the primary currency in traditional finance, the US dollar, can be printed out of thin air at a rate that is variable, causing inflation. In other words, the Fed has a God mode admin key that can be used to change the rules whenever they deem necessary, for better or for worse. And finally, number 7, TradFi banks are susceptible and oftentimes in lockstep with governmental regulation in their environment. Now let's dive into the world of decentralized finance, or DeFi for short, which refers to the ever-growing world of peer-to-peer financial services that facilitate transactions with no third-party banks or governmental oversight, returning financial autonomy to the individual. Yes, please. Real DeFi is permissionless, meaning users do not need to ask permission from anybody to run the code for most smart contracts. In the Liquid Loans protocol, for example, the only barrier to entry is the minimum of $2,000 of PLS. It also has immutability. Well-formulated smart contracts will be immutable, a fancy word for unchangeable. This means that once deployed, the code will exist and run forever. This is advantageous because it ensures that the rules of the smart contract will not be changed. However, this also places added pressure on the devs to make sure their contract is perfect beforehand, since they will not be able to make any adjustments later on down the road. Then there is transparency. All transactions on a blockchain like Ethereum or Pulse chain are available to view by the public on their respective block explorers. We then have the elimination of middlemen, along with their pesky, absurdly high fees. DeFi exchanges, for example, allow users to trade tokens for fractions of the costs compared to the standard TradFi broker. But the eliminations don't stop there, and next on the chopping block is counterparties. A feature of a well-formulated smart contract is the ability to interact with fully audited, immutable code for financial services. This removes the need to trust another person or an institution, which time and time again has proven devastating in the crypto industry. And last but not least, we have blistering speed and range. Blockchain tech is available to anybody with internet access. DeFi transactions can be made from anywhere around the world almost instantly if you use a fast network like Ethereum or Pulse chain. So let's get rolling with the cons. Firstly, wherever money is changing hands in the globe, you'll find scammers, and DeFi is no different, with risks of scams and hackers lurking on many blockchain corners. metaphorically speaking. Since DeFi is still in its infancy, lowlifes have been trying to pull a fast one on the more naive and gullible investors. To avoid scams, we recommend never giving your keys to a third party, never connecting your wallet to uncertain websites, and only buying digital assets which have been fully audited and do not have admin keys. To avoid being hacked, never show your seed phrase to anyone, and always use a hardware wallet to sign all transactions. On-ramping and off-ramping in DeFi can also be tricky at times. Currently, many DeFi projects do not have the ability to move quickly from fiat to crypto and vice versa. So unfortunately, we still have to bite the bullet and take coins to a centralized exchange to cash out. We recommend using exchanges for buying and selling only, and not for storing any of your assets long term. And last on the list is the volatility that some can't stomach. Cryptocurrency is famous for extreme volatility, both to the upside and downside. However, if a project has good fundamentals and you have a long time horizon, the price appreciation is incomparable to TradFi products. So to sum it up, TradFi and DeFi both have their own pros and cons. TradFi is what we're most used to, comes with face-to-face interaction, and you may be covered by insurance if something were to go wrong. On the flip side, fees are high, there's rampant inflation, many central points of failure, and corruption, to name a few points. DeFi, on the other hand, is permissionless, has immutability, transparency, and eliminates middlemen, along with being fast and secure. But there is also dangers too, with scams and security issues to be wary of. There's also friction when liquidating assets into fiat currency, and of course, extreme price volatility. It really comes down to which one suits you and your risk level at your time of life. So I hope you enjoyed that video on TradFi versus DeFi. If you like content like this, do hit that subscribe button and that bell icon so you're notified every time we drop new content on the channel. You can also tap the like button, share the video with someone who you think it may benefit, and if you're feeling very kind, consider dropping a cheeky little comment below for the algo. It does help us out. Thanks for watching, and I will see you on the next one.